Well, good morning, everyone. I'm David Paul. I'm the Managing Director of VectorVest here in the UK. I'm sure you've all read and seen the minutes of the American FOMC last Wednesday, where they introduced a very hawkish air to the marketplace. Hawkish means rates going up, interest rates going up, that is, and the 10-year rate would seem to indicate that we're going to get three small interest rate hikes in the US during the course of the first half of this year. So this morning I've taken a little bit of a defensive look at the marketplace, but before we start, we'll have a look at the overall market timing. And in the first slide, I'm looking at the UK VectorVest Composite, an equally weighted index of all of the shares that we follow in the UK market, some 2,200 shares. And that looks at the progress of the VectorVest Composite since the 2020 sell-off. You can see that sell-off on the left-hand side of the chart and the progress that we've had since that. Over the last 6 months or so, the market, the UK market, has gone into consolidation. I was hopeful that it was going to break out of that consolidation last week, but in fact, the FOMC announcement last Wednesday, 7 o'clock our time, caused all markets in the world to come back. At the moment, the long-term trend of the UK market is still up. The shorter-term trend is down, and VectorVest advocates caution in buying stocks. Now, the situation is much more negative in the US, and this is the VectorVest Composite US, which is based on 8,000 odd shares that we follow in the American markets, the broadest measure of the American market that I know. If you've been following the American market, you'll know that some of the narrow measures, the Dow and the S&P 500, have outperformed the broader market, but the broader market looking very weak. It's been weak in terms of breadth since last March, and you can see that since last March, the market really has marked time. At the moment, the longest term measure of the trend on VectorVest is down, and the short term measures of VectorVest are down, and VectorVest advocates standing aside in American markets at the moment. The American market is on support. It had a good day yesterday, rising off support, and as soon as these trends on the overall market change, then I've earmarked quite a few buys in the American market for swing trading. And I'm looking at NVIDIA and looking at AMD. Those are the first two shares that I'm going to look at. But in the UK this morning, I want to look at three stocks that I think that have got a great deal of merit in this environment. The first one is Blackrock World Mining. Now, personally, this is one of my biggest positions. I've held it through that pullback. I've owned the share for quite a while. It's got a position in all the usual suspects, all the big miners, Anglo, BHP, Rio Tinto, and as you can see, over the last this is a weekly chart over, I think, 3 years. Earnings per share is rising strongly as commodity prices have risen. You can see that in the blue line study just below the price chart. The price of the investment trust went up to £7, and then it pulled back. It pulled back in 3 waves, which is quite healthy technically. It then broke up, and it's now pushed above, I think this morning it's above the £6 level. That looks to me as if that wants to go an awful lot higher, certainly back up to the £7 level again. And in the window below the price, you can also see the stochastic. That's a weekly stochastic. It's an 8-week stochastic showing a reverse divergence signal for those technicians that are watching. That's a very healthy signal. The second stock is Legal & General. Now, this is a new purchase of mine. I've just bought it a few days ago. And the reason behind the purchase is both fundamental and technical. The share has been trending up since the lows of March 2020. Recently, it's been revalued, and that green line just above the price is the VectorVest valuation. And as earnings per share rose, that's the blue line and the window below the price, then the VectorVest program, in fact, revalued that stock. Over the last, I suppose, 6 to 9 months now, the share has charted what technicians refer to as a cup and handle pattern. And a few weeks ago, in fact, it broke out of that cup and handle pattern, and that's where I bought into it. So that's a new purchase of mine, and it should do well in this environment. Now, the third stock, I think we could apply to all UK banks, but this is a particularly interesting chart of Barclays. It's a 15-year chart, a weekly chart over the last 15 years. And right to the left-hand side, you can see the sell-off that occurred during the global financial crisis in 2007, 2008, right to March the 9th, 2009, a date sort of embossed in my subconscious. As rates have stayed low and got lower in the period, so the share price of Barclays and all the major banks has been held back. And Barclays would seem to have broken that long-term trend line that's been in place for the guts of since March the 9th, 2009 now. And that's quite an important break. The Lloyd's price has also done well recently. But to me, that chart and that breakout in Barclays would indicate a multi-year move. The share came back a little bit a week or two ago with the demise of Jess Staley, but it seems to have shrugged that off and is moving up. So I would expect that, don't expect fireworks, but I would expect banks to do well in this environment over the next year or so. So those are 3 positions that I have myself. And I think they should prosper well in this environment. They are very conservative calls. They all pay a reasonable dividend. Legal & General especially pays a 7% dividend, I think. And Blackrock Millers pays a 5% dividend. So dividends are good, and I think that there's a high probability of exceptionally good but conservative capital growth in those 3 stocks. So if you're interested in VectorVest, folks, just go to vectorvest.co.uk and you can kick the tires of VectorVest for 30 days for a whole 99 pence. That's the Christmas offer. Thanks very much indeed.